Hey everyone, Kevin Lewis with Home Life Benchmark Titus Realty, and it's time for your July 2022 Fraser Valley Real Estate Market Update. For the third month in a row, we've seen prices and sales numbers both drop as interest rates have continued to rise, which is really not a big surprise when you take some time to stop and really think about what's happening in the market. June 2022 finished with about 6% fewer sales than May 2022 and about 43% fewer sales than June 2021. We also came in around 34% below the 10-year average, which is again not really surprising after we've seen the interest rates go up over 2% in the last 6 months. If you couple this increase in or decrease in the total number of sales in combination with the increase in new listings that we've been receiving, June 2020 finished with about 6,000 listings available to purchase, completely ending the inventory crisis that we were just in a couple months ago. With both sales down and new listings up, it's no surprise that the laws of supply and demand have driven prices back down a little bit, and not to mention that I've already mentioned the interest rates that have gone up recently. If you take these interest rates in combination with the decrease in prices, affordability has actually remained relatively stable over the last few months. Now, what do I mean by affordability remaining stable? I mean that the sticker price you pay is only part of your transaction in real estate, because most people are going to end up having a mortgage with their purchase. If you're purchasing and getting that mortgage with the higher interest rates, we've seen that the decrease in price has actually kept monthly payments about the same with the increase in rates that we've been seeing. So what was a $1.2 million house is now maybe just above $1 million, but because the interest rates have gone up, your monthly payments are still coming in somewhere around $3,500 to $4,500, depending how you structure your mortgage. So really, affordability is more factors than just the sticker price, just the interest rates, just the number of homes for sale. It's to do with all of it together, and it all comes together to create the market that we have. And that's where we're seeing this somewhat stability in the affordability of homes while continuing to see prices decline and interest rates increase. Now, I hear a lot of talk about a potential crash coming to the market, and this and that. Now, I'm certainly not going to rule out the potential for prices to drop drastically. As any crash in history, nobody's ever predicted it coming. That's how it ends up happening the way it does. But I don't really think that there's any opportunity here for a real crash to come in this situation, as we have several factors that are going to continue to keep the market afloat and keep it, as I've said several times in this video alone, relatively stable when we're talking about the affordability of things. One of the key factors I think that is going to keep the market going and prevent any sort of a crash or substantial price decrease over the next couple months is the fact that we have higher than ever speculation in our real estate industry. In the recent years, we've seen more people become extremely, or not extremely wealthy, but excessively increase their net worth just from their property values alone. A lot of people missed out on buying for the last couple of years and seeing those lifts, and they want to get their piece of it, or they did already get in and already seen it, and they want to do it again. And if you look at the history of BC real estate, specifically in the Fraser Valley, anytime we slow down or stabilize, it typically does follow with prices going up again in the future. Now, of course, we're looking into the future, and I don't have a crystal ball, so I can't say for certain, but I do think there is enough speculation alone just from the investors to keep the market afloat, let alone the fact that with interest rates going up, there's going to be less people who can buy the homes that they'd like to buy. Those same people still need a place to live. And instead of purchasing, the only option left is to rent. Therefore, rent prices could continue to increase, which will also stimulate investors to keep in the market and keep prices up. And of course, the last reason that I don't think prices are going to crash or decrease too substantially is that we're still high demand in the area for people to buy homes for themselves to live in. There's no question about it. I've got several buyers, even in the slower market, that are still buying homes. I've got a bunch of buyers who are getting ready to purchase a home soon. I've had some that have sort of pumped the brakes a little bit and want to see what the market's going to do. But eventually, when the prices come down to a point where it's low enough, buyers will be incentivized by the slightly lower prices, not rock bottom prices, but slightly lower than they are today, stimulating the market once again and having more sales happen, which in turn will reduce the inventory that's on the market, and the laws of supply and demand will continue to keep prices either stable or potentially even spike up again next spring. Now, as I said, I certainly don't have a crystal ball and I can't see into the future, so I'm not saying for certain that there's not going to be substantial price decreases. It is certainly possible. I just don't personally see it happening with everything that I see happening in the economy and the market currently. So what does this mean for you if you're looking to buy, looking to sell, or looking to sell and buy? Well, let's start with the last one there. If you're looking to sell and buy, it all becomes relative. If you're getting less money for the house that you're selling, whatever you're going to be buying into is also going to be less money as well, because the whole market has come down. Now, if you're looking to just sell, it really depends on what your reasons are for selling and whether you can hold for the next time prices jump up and the market picks up, or if you need the money today. Either way, we can definitely tailor a plan for whatever it is that you're looking to do. And again, the situation's going to be unique. There's not a one size fits all for this kind of advice. Now, of course, if you're looking to purchase a home, we have to keep in mind there's a very good chance interest rates will continue to rise over the next couple of months. And will prices drop enough to maintain that affordability that we discussed earlier in this video? Whereas interest rates go up but prices come down, your monthly payments remain the same. Monthly payments are one of the main factors that the banks look at as far as your total affordability and how much they're willing to lend you for a mortgage. So there's a whole bunch of different factors that come into things, and yeah, while prices might be $50,000 lower in 3 months from now, you might go to get pre-qualified and qualify for $75,000 less than you would today. Therefore, your buying power has now been taken $25,000 less than it is today. So it's a really balancing act as far as what's best for your situation. And again, there's no one size fits all for this kind of advice. So if you are thinking about buying a home in the future, especially if it's a first home or even an investment property without selling something first, let's have a chat about it, figure out what your situation is, and we'll sort of come up with a plan when the best time would make sense for you to make that purchase happen. As always, I love hearing from you guys, whether it's with your plans to move soon, whether it's your plans to ideas of moving in a couple years, whatever it is. If there's anything involved with purchasing or selling real estate coming up in the next couple of years, make sure you give me a shout. If you have any questions about the market, whatever, leave me a comment below, send me a text, send me an email, give me a call, 604-218-5635. I always look forward to hearing from you and hope to talk to you soon.